On by David Buick, partner at BGC Partners, and with us for the hour, Alpesh Patel, principal at Profinium Partners. Gents, good to see you both. David, let's kick off with you first of all. The cynic in me will say after 15 billion in profits last week, this is quite a nice political gesture.
You are a cynic, aren't you? I was interested to hear the use, or the English usage, saying that the 6 members of the British Bankers Association, or most senior members, will be collecting to see how they can get the market or the banks lending again. I wonder. I think it's much more likely that that very distinguished and august group of people will be telling Dr. Cable, also George Osborne and others, why they can't. The fact remains is that we're about to enter the most incredible period of austerity. We have seen, obviously, bank profits increase by £15 billion last week. The world has been so slow and cack-handed in coming to hand over regulatory requirements, which nobody is still particularly certain of exactly what is required. I'm afraid the most important thing that should happen in the course of the next 2 years is that the taxpayer gets his 45 billion plus back as quickly as possible. Whether we like it or not, banks are still part of the private enterprise system, and shareholders have to be adhered to as well. And whatever can be done to expedite that situation in terms of getting the taxpayer his money back has to go to the head of the queue. And I find it extraordinary that politicians, apart from political expediency, should be bleating about lending money to small businesses when they're about to make the most gargantuan, and I hasten to add, necessary cuts in public expenditure, which is going to necessitate, obviously, unemployment going up. People to lend money to small businesses have to have a very good case that they can repay it. And I suspect with a lot of these things that a lot of the banks' problems have been they have no one to talk to. It's all this press button, dial that, splash hash, and the rest of it. And also small businesses need to have their cases presented by accountants. Now, this is a costly exercise for them. But if they can't show cash flows and why they should have this money, it's going to make life very difficult in the next 6 months.
It's one of those stories, it's very hard to know where the real truth lies. Because you only need to say a couple of small businesses to get into the press, say, we can't, you know, the bank's not renewing our loan, and then you think everybody's in the same boat. What do you think the real position is here?
I think what's really happening is, and I should preface this by saying only a fool would ever disagree with David, but let me be a little bit foolish on this. What's really happening is the bankers have been looking at corporate earnings, and I've got some of the figures here. 52% rise in quarterly profits year to year in the US, and they're seeing these companies which have managed, no thanks to the banks, to cut costs, to improve their earnings, to start hoarding a bit of cash, and the banks are thinking, hey, there's people here that we can who've got a bit of money in their accounts, which we're noticing, maybe we should lend some money to them and help them undertake some mergers, some acquisitions and so on. Now, of course, the smaller end of the companies, exactly as David says, they're still going to suffer because it's very expensive going to accountants and doing these kinds of things. But that's always been the problem. What's happening here is the bankers are making it look as if they're trying to help small businesses. Of course, it's self-interest by the banks. They're saying, we've missed a trick here. These companies have managed to survive quite well, and presumably the ones which have survived are ones worth lending to.
Well, yeah, no self-serving banker ever wants to lend money to a person that needs it.
No, absolutely. You don't want to give an umbrella when it's raining, do you, as a banker?
No, you only want to give money to people who don't need the money, and that's surely the first principle of banking in this.
And what they're probably saying is,
austerity age.
If you survived the credit crunch, and you saw the timeline you put up, if you survived that, then probably you're worth lending to because you don't need the money.
Yeah. Exactly. I think we've summed it up quite neatly. Alpesh, we were at 300 pence at the low point. We're now at £4.33. Yeah. So we've come quite a long way.
I should openly declare an interest here. I'm long BP on my Wellspreads account by coincidence.
On Wellspreads as well?
Exactly.
Not only do you actually are you long on the stock, you've
got the guess.
Okay,
exactly. Good. So I'm long BP because I looked at it going up to £5. Not just because of them tying up the oil leak, but also because they're generating cash around the rest of the world. And as Hayward said, although he said it very inelegantly and riled up the Americans, this is just one part of their massive operations around the world from which they're earning money hand over fist.
David, we're all getting fairly positive on BP.
Absolutely. We have every reason to do so. You know, they generate $35 billion worth of income, as Alpesh alluded to. They've got a worldwide network. I think this business that Obama, or should I be more respectful and say President Obama, was vituperative in his criticism of BP, and I thought very, very viciously and unfairly so, despite the fact it was a massive human problem and a real issue for which obviously everybody is very, very sorry for. But there are others that will be brought to book. No matter what the administration has been saying on your broadcast in the last couple of minutes, you know, I'm looking forward to hear what happens to Adaco. I'm looking forward to know what role Halliburton played, what role Cameron played. These have all got to be answered, and I actually genuinely believe that it looks like Tony Hayward, though his choice of phraseology from time to time left something to be desired, was probably nearer the mark.
Yeah, and I was just thinking, Alpesh, I mean, we went from sort of 53 to 4800 back to 53, and I wondered whether, I just wonder whether we're now generally more positive than we were on that horrible slide down to 4800.
It's a very easy way to know which way the market's going to go. What you do is you ask a spread betting firm, most of your clients long or short, and you do the opposite, because as we know, most retail clients call it wrong. And I suspect at the moment, most of Alistair's clients are long the FTSE, and therefore...
Are they, Alistair?
Say aggressively, but I think as a general.
Which means we probably want to take the other side of that bet.
David?
Basically, I think the market is looking at itself in the mirror, realised that huge cost-cutting exercises have gone on. But the most important thing to me is the alternative asset classes are extremely unattractive because interest rates are on the floor. If you're selecting your stocks and they're the big stocks and are going to pay decent dividends, you might as well go with the flow. But I think this market will bob around like a cork in a bath in a trading range between 5150 and 5400 for the next 3 or 4 months.
Okay.
Expanding in emerging markets in a country that's got a lot to offer.
Briefly, Alistair?
I'd have to agree. I think there's a possibility, from my understanding, that they could get a quote in the UK, and if that were to be the case, it would give the UK investing population a more direct access or investment into the Indian market, and with 20 million new subscribers on a monthly basis, it's a huge market.
Okay, David, Alistair, thank you very much indeed. Nice to see you both. We'll get a word from Alpesh on that as well. Bearing in mind it's your sphere of excellence.
Well, thank you. This is exactly what Cameron was talking about. When will Britain and the financial markets in London realise that if they really want mega growth, there's these huge companies which we haven't managed to get IPO'd over here, although the London Stock Exchange is out there permanently, pretty much, in India, looking for these mega flotations into London. And this is an ideal market, certainly for commodity-related companies like ESSA on their energy front, because that's what we do best.
What is the biggest selling point? If there are Indian companies looking for international capital, why come to London as opposed to anywhere else? It's a competitive market, they can get money anywhere in the world. Why should they come to London?
Because you're going to get more money if you're based out of London than if you're just floated purely on the Mumbai Stock Exchange.
No, but if they're going to go for an international listing,
yes. Why
London? You know what I mean? I mean, why London rather than New York or Hong Kong or wherever?
Partly because there are more Indian companies listed on the London Stock Exchange than any other exchange outside of India, including all the American ones, which you wouldn't have expected. It means that you're following a proven, safe path of ensuring that you're going to be able to raise the capital because it's familiar. London is actually a familiar place for Indian companies to raise capital, far more than New York is, ironically. And so you want to make sure you're going to maximise the amount of capital you can raise, and that's why London's better than the American markets for it.
I was just trying to work out what the competitive edge might be.